Welcome back. Even though home prices continue to slide, housing affordability dropped to a new all-time record low last week as mortgage rates have been on the rise. Also, the number of pending home sales continues to fall as well, but the number of newly listed houses saw a very unusual increase last week. So in today's video, I'm going to explain exactly what's happening right now with the US housing market based on a new report that was just announced today here from Redfin. So I have a lot to share in today's video. Let's go ahead and dive right in. Here's that report from Redfin here. It says, with monthly housing payments at an all-time record high, would-be buyers are waiting for houses to become more affordable. But slightly more homeowners are listing their houses for sale this month, providing a glimmer of hope for buyers. So during this time frame, or during this time of year, I should say, we tend to see a decrease of pending home sales or a lack of contracts being signed between buyers and sellers. But on top of that, it's more normal to see decreases of new listings for the remainder of the year, not an increase. So not only are we seeing a decrease of contracts being signed, but for good news for buyers out there, we're seeing an increase of new listings, highly unusual for this time of year. Redfin also touched on what home buyers are doing right now. So they say here that a lot of buyers are waiting for more affordable houses to be listed for sale. A lack of houses for sale historical low inventory levels continues to be a big problem. But this slight uptick of new listings is not something to kind of like leap for joy for because it's a small increase, but it could offer a glimmer of hope for buyers out there. Redfin also talks about how mortgage rates have been sitting at about a 2-decade high. Yesterday, which was on Thursday, average 30-year fixed mortgage rates, according to the Mortgage News Daily, reached 7.47%. Excluding 2 days in August, that's the highest rates going back to the year of 2000. As of today, which is Friday, rates decrease slightly, but we're still well above 7% on average. So not only are home buyers facing these rising rates, but also rising home prices compared to 1 year ago, though. So home prices, or I should say the median sold price nationwide, is up by 3% year over year. However, though, I'll share how home prices have been decreasing ever since really June and July this year, even though they're up compared to last year's levels. And because of these soaring costs that home buyers are facing right now, we're seeing a lack of contracts being signed, down by 13% from a year ago. Also, the total number of houses for sale or housing inventory is down by 16% year over year, as many homeowners are deciding to stay put and not sell their houses. But again, it's going to be interesting to see what new listings does for the remainder of the year, because if more people decide to list their houses for sale, then more than what's normal, that should increase housing inventory as well. And of course, if enough of that happens, we should see home prices also decrease as well. Regarding what home sellers are doing, it says a few more home sellers have jumped off the sidelines. They're still down by about 7% from 1 year ago, but that's the smallest decline since July of 2022. And I'll share some trends regarding new listings here in a little bit. They also mention here that this is possible that some homeowners are deciding to list their house for sale given the low level of supply and also relatively high home prices as well. All right, so speaking of home prices, let's have a look at what was the median sold price last week. And this is for the 4 weeks ended September 17th this year. And data from Redfin goes back to the year of 2015. So the US median sold price was just under $375,000, up by 3.4% year over year. However, that's the smallest increase in about a month. And also the median sold prices are only up partly because of elevated rates and hampering prices during this time last year. So in other words, one of the main reasons why home sold prices are up compared to 12 months ago is because last year at this time, our housing market was falling greatly. Home prices were tanking and also new listings were increasing as well. And because we saw that sharp pullback in prices at this time last year, that's one of the main reasons why home prices are actually up compared to 1 year ago. And by the way, if you guys are curious, the US median sold price is up by 8% compared to the start this year. Meanwhile, the median asking price is just under $387,000, up by 4.5% year over year. That's the biggest increase in nearly 1 year. Here's a chart showing the US median sold price, again up by 3.4%. Very interesting trends, especially compared to last year. So starting in July, prices fell greatly through September, and then they fell pretty greatly in October and November as well. So what we're seeing right now is that the difference between this year and last year has been growing because prices are only decreasing slightly, whereas last year they fell off a cliff. So more or less what we're seeing right now is home prices decreasing, which is seasonal or normal during this time of year. What's not normal though is this right here. This is the median asking price of newly listed houses over the past 4 weeks. A sharp increase over the past couple weeks here, a gain of 4.5% year over year. We did see an increase last year at this time as well as 2021 and 2020, but a very sharp increase compared to previous years. Redfin also provides some analysis regarding the 50 most populous metros and how they fared, and there's some very big changes here. So in Miami, Florida, that led the nation, or led the 50 most populous cities here, a gain of 14.4% year over year. After that was San Diego, a gain of 11.5%, then Anaheim, California in the Los Angeles area, and then Newark, New Jersey, and then New Brunswick, New Jersey as well. So there's only 8 metros in which prices fell on a year-over-year basis. Therefore, there's 42 that were up on a year-over-year basis. So again, leading the nation with the biggest decrease in the median sold price was Austin, Texas, down by 4.5. Then we had Fort Worth, Texas, Phoenix, San Antonio, Texas, and Portland, Oregon. As I mentioned earlier on this video here, the average monthly housing payment of would-be homebuyers reached another all-time record high, data that goes back to the year of 2015. But also based on the National Association of Realtors Housing Affordability Index that was announced, a week or two ago, they also announced that housing affordability on a national level is at the lowest levels on record, and their data goes all the way back into the 1980s. So I'm getting a lot of people or agents telling me that rates are at 7.5%, big deal, right? Because the average 30-year fix is around that when you go back decades ago. But what the big changes or the big difference is the giant increase in prices over the past 3 years. So we have high home prices, and on top of that, elevated rates, which makes housing affordability at very, very low levels. So for example, when looking at rates at around 15% on average back in the 1980s, of course, home prices were much, much lower than we have today, which of course is one of the main reasons why we have all-time record lows for housing affordability right now. In any case, the average monthly housing payment is $2,661 per month at the current 7.19% rate. That's the weekly rate according to Freddie Mac that was announced on Thursday. But that is a gain of 12% compared to 1 year ago for the payment. That's a new all-time record high. So in regards to that 7.19% rate, this was announced on September 21st, which I believe was on Thursday, the 30-year at 7.19%. However, when looking at daily rates, we have been hovering around 7.3 to 7.5% for quite some time. According to Sam Cater, who's Freddie Mac's chief economist, he stated the following. Mortgage rates continue to linger above 7% as the Fed paused their interest rate hikes last week, I should say. Given these high rates, housing demand is cooling off, and now home builders are feeling the effects. Builder sentiment, this is builder confidence, according to the National Association of Home Builders, declined for the first time in several months, and construction levels have dipped to a 3-year low, which could have an impact on the already low housing supply. So let's first talk about this builder confidence or builder sentiment here, because here's a chart showing just that. Anytime the builder sentiment index, which is actually called their housing market index, Anytime it dips below 50, that means home builders on average are more pessimistic regarding building single family houses. Anytime it's above 50 means they're more confident regarding constructing new single family houses. So for the month of September, this was announced, a few days ago, builder confidence decreased to 45, meaning for the first time since April, home builders are actually pessimistic regarding new home construction right now. In regards to Freddie Mac's quote here saying we have construction levels have dipped to a 3-year low, this is, I kind of cringe a little bit when I read that, because when looking at total housing starts, which includes building apartment buildings to rent out plus single family houses, housing starts is at a 2-year or a 3-year low. However, though, when looking at housing starts of single family houses, it's night and day difference. So for example, take a look at this. Here's housing starts. And by the way, this is on our good Uncle Fred here. And also the source is the US Census Bureau. So housing starts for total units, again, single family houses plus multifamily, about 1.3 million on a seasonally adjusted annualized basis. At 1.28 million, let's call it, that's the lowest levels going back to June of 2020. However, when looking at housing starts for single family, they're at the lowest levels since June this year. And by the way, a housing start is a beginning phase in the construction of a brand new house. So what I'm more focused on is single family and not just total housing units, because right now the levels at 941,000 on a seasonally adjusted annualized basis here is more or less on par with pre-pandemic levels, but still well below the peak we saw back in December of 2020 when there was around 1.3 million. In any case, I actually want to just provide that clarification in case you guys saw this quote here and had some questions regarding it. Let's also look at this because they also said here that for the week ended September 21st, again, the rate was 7.19%. That was up slightly from the previous week at 7.18%. However, 1 year ago, the average rate was just under 6.3%. But again, when looking at daily rates, according to the Mortgage News Daily, we're around 7.3% and not 7.19%. So if rates continue to increase, we should expect to see housing affordability to fall yet again next week. We shall see. And here's a chart showing housing affordability or average monthly housing payments, which is right here. Again, up by 12.3%, the all-time record highs right here. Something to be aware of here when looking at the average monthly housing payment to buy a median price home at this time back in 2020, it was around $1,500. Now it's a whopping $2,661 per month. And that equates to a giant increase of about $1,100 more per month to buy a median price home today compared to 2020. Okay, let's change gears slightly here and talk about the number of pending home sales, a measure of contracts being signed between buyers and sellers of existing houses, excluding brand new home construction. So pending home sales decreased by 12.7%. So that's on the demand side. Let's have a look at the supply side. So new listings decreased year over year, down by 6.7%. Now, something they mentioned here, and also I was going to mention anyways as well, this 6.7% decrease is the smallest year-over-year decrease in about a year. Something to keep in mind, though, is that in the second half last year, new listings absolutely fell off a cliff, whereas this year, new listings are decreasing, but not the same rate we saw last year. Therefore, the year-over-year differences has actually been improving over the past several months now. Now, here's another challenge that home buyers are facing. That is the lack of houses for sale. Active listings or housing inventory down by 16.2%. This is a look at the number of pending home sales. Has been falling ever since really June this year, which is seasonal, as you can see each and every year, except for 2020, of course. We should expect to see a decrease of contracts being signed for the remainder of the year overall. But we're down right now by about 13%. In regards to new listings, this is that very unusual increase I was talking about here. Let me just zoom in here. A very small increase in the number of new listings, whereas last year, new listings just fell off a cliff because our housing market was in shock due to rates increasing from about 3% to about 7.5%, 7.3% by the time we hit October last year. And because of that, a lot of people decided not to list their houses for sale. This year, the number of new listings has been on this slow downward trajectory here, but a small increase this year, which is highly unusual because we should expect the number of new listings to decrease. So of course, I'll definitely keep you posted because of course, this is a very short-term trend, but this trend continues. Let's just say we see new listings absolutely skyrocketing. That would cause inventory levels to also increase as well, which of course will put downward pressure on prices as well. So I'll definitely keep you posted with the latest developments. So make sure you're subscribed. Shameless plug. Let's also look at active listings. Active listings have been more or less flat for about 2 or 3 months now, but we're still down by about 16% from last year's levels because inventory levels were increasing greatly from April to about August last year. Redfin also provided the metros in which pending home sales have decreased the most. And a big picture here, there was not a single metro in which pending home sales increased compared to 12 months ago. Every single one of the 50 most populous metros is down. The biggest decrease was actually in Seattle, down by about 26%. Then we had San Antonio, Atlanta, San Diego, and then Sacramento, down by about 22%. In contrast, let's have a look at the number of new listings for each of these 50 biggest cities here. So new listings decrease in every single one of these metros here, except for 8 of them. The biggest increases of new listings were Miami, Florida, a gain of 3.2%. And after that was Milwaukee, San Jose, Houston, and San Antonio, Texas. In contrast, the biggest decreases year over year were Atlanta, Georgia, down by 28%. Then we had Las Vegas, Riverside, Portland, Oregon, and New Brunswick, New Jersey. So pretty wild to see that 42 of the 50 biggest cities are still down compared to 1 year ago. In regards to inventory levels, the month supply right now is still at 3.1 months, roughly on par with last year's levels, but still higher compared to 2020 as well as 2021. At 3.1 months, this is still a seller's market overall nationwide right now. But it has been increasing over the past couple of weeks now, though. Let's also discuss how fast or how slow houses are selling in the United States right now. So days in the market is at 30 days, roughly on par with 2022, but still slower compared to 2021. So at this time in 2021, days in the market was around 25 days. Now it's 30 days. So houses on average taking about 5 days longer compared to the same time frame in 2021. However, it's still selling faster though from 2020 though, when at that time, days in the market was around 38 days. They also provided the share of houses selling above the seller's final list price. That share is at 32%, virtually identical to last year's levels, as well as 2020, but well below what we saw back in 2021, when the share back then was around 45%. And lastly, here's a look at the average sale price to final list price ratio. It's at 99.5%, which means on average, over the previous 4 weeks, home sellers sold their houses for about 0.5% below their final list price. That's it for today's video. Thank you so much for joining me in today's video, by the way. Hope you have an awesome day. Like and subscribe, and we'll see you in the next video.